I think it's working, guys. So that's perfect. Perfect. Everything is now almost on. So that's gonna be perfect. And then we'll be able to start. So let's just wait for more people to join. As right now, I think, yeah, there is no one. So yes, let me just share this. So we're gonna share this in the Discord like usually. So everyone, we're now live for the free weekly outlook. Join now. Perfect. Okay. And now let's as well just share this directly on Instagram. Okay. Free trading outlook. Okay, perfect. Okay. Perfect. So now we shared everything. Okay, so we already have 11 people. 11 people that joined. Let me just quickly go directly on Instagram just to share the last thing that we are live. So like this. Perfect. So join the live stream. Free Forex outlook. Perfect. And now we do the little music, and at the end, what is this? Okay, whatever, we're gonna put this as a music, and then last thing, we go on copy pasting the link directly on Instagram so people will be able to join. Okay guys, so I hope everyone, by the way, is doing well. We're gonna start with, of course, our major pairs like usually. And we're gonna just pretty much do the major pairs like usually, then with gold and some indices. So watch, join now. Okay. Perfect. Perfect. We like that. Okay. Nice. Okay guys, so yeah, I hope everyone is doing well. Hope is doing well. Like I just said, the story and everything has been sent, everything is updated, so now it's really time to start. So guys, let's start first with, of course, Euro USD and see what's going on since the previous week and since the previous time that we did any thing. So okay, so first things first, we had on the previous week we had Euro USD, and I don't know if you remember, but on the previous week we had this range from this low to this high, and we had our Fibonacci from the bottom to the top, and exactly right here we found this POY. That price tapped into it, and this was directly on the previous week. Remember, it was straight away from the previous week. We were in this POY, and I said, yeah guys, we need this high to break the structure for it to consider a new a new change of character / break of structure to the upside. So this is the confirmation that we're looking for after the higher time frame POI mitigation, as this is the last break to the downside here, that was not it. The break of structure to the upside happened actually here. I'm sorry, it was the wrong high. So yeah, we broke structure to the upside exactly right here. Why? It's because we broke structure here, then we had this range, and then we broke there, so we had this range, and then we had another one here, so we had this range. So this was the break of structure that we needed to look for, and we had it. So then we were looking for a buy, and at the previous week we were exactly in this area right here. This was market open, so this was where we were in the previous week. So of course we had some extreme POYs in the bottom. Okay, disappeared. Okay, so like I was explaining, of course we had some extreme POYs in the bottom right here, but as well we had some POYs that were not the most extreme one, and actually this is the POY that reacted. So during the live streams I focus mostly on the extreme POYs, but actually in the strategy you can have a look for earlier entries, and in this case this is what happened. So right here we had a POY on the 1 minute. It was not the most extreme one. The most extreme one was on the 1 minute below right here, but I mentioned as well that when you have a POY before the most extreme one, you can wait for an earlier entry. And by looking for an earlier entry, what I mean is just a 1 minute break to the upside to confirm that price is ready to leave. And in this case we had this 1 minute break to the upside exactly right here after we mitigated a POY that is not the most extreme one. So straight away you could have just entered at this new extreme 1 minute POY on the 1 minute time frame only. And exactly right here, this is the trade that a lot of members caught in the community that I have. So as you can see right here, wait, I went a little bit too fast, so oopsie. So when you identified your 1 minute break, you then identify a new 1 minute extreme POY. And in this case, your entry will just be there, you know, so you enter right here at this POY. Your stop loss will just be below the low. And below the low, you will add pretty much 1 centimeter to the stop loss below right here. Some people as well, they found that this is a pretty tight stop, so they left a little bit more space and a little bit more room for the trade to play out. It was as well possible, but technically if you do this, you need to understand that if you put a bigger stop loss, you're reducing your size, like your take profit size with the risk reward ratio, meaning that, for example, if your stop loss is 5 pips, it will be 5 pips as well for a 1-to-1 risk reward ratio. If your stop loss is 9 pips, then your 1-to-1 will be 9 pips. So if, for example, price push down and then hits 103 and then could come back to break even or even the stop loss, if your stop loss is bigger, you might get out without any profits. But if your stop loss is tighter, of course, you might have the take profit and then price might reverse on you. But yeah, that's the two thing. Some people had a bigger stop here. Personally, what was the best thing for this trade is actually, here, price created tapped into the POI at first here, then came back here. For me personally, this trade right here, the most thing according to the strategy here, you see your stop loss is really big. So according to the strategy, your stop loss should have been here, and this trade hit 103 risk reward ratio. And according to the strategy, like how I personally place my stop, this should have been break even plus partial trade. So basically right here, price came back, hit 103 risk reward ratio, that is our partial level, and then after that price came back to break even. Some people, like I said, had a bigger stop, so this means that their 103 never got hit at first, so 103 never got hit, price came back into the entry once again, and this is when price finally left afterwards. So I can show you the exact entry, because this is the exact entry that some people caught in the group, and this is the exact entry for example, someone, you see his stop loss was a bit like a bit bigger, because technically he never reached 103. His take profit one was there, so that's why he got a really like big risk reward ratio afterwards. But some people as well just hit 103 risk reward ratio like right here, and it came back to break even. So it was really depending on where your stop loss was. But anyway, this trade was forecasted on the previous week during the weekly outlook anyway. So this POY, this entry, etc., was forecasted here, guys, for free, so everyone who could have caught this trade. And yeah, so that's why we're doing this weekly outlooks. Of course, this is just the major pairs, but we trade as well minor pairs anyway. But yeah, this was a pretty textbook setup according to the strategy. And yeah, that's pretty much it. So this setup already happened right here on Euro USD. And not before, but after that, price just pushed up, hit the final take profit that was around the hourly high right here. As you can see, price just completely pushed up and smashed the take profit final before here sweeping. Looks like we swept as well the liquidity. I moved my alert, by the way. Okay, so right here we swept as well the liquidity, looks like it, or no, let me see. Okay, no, we didn't sweep any liquidity. Instead, we just created equal highs. So this means that most likely price will come back to that level. I don't know if soon or maybe later on after mitigating the POIs below. But anyway, right here we have a lot of liquidity as we created pretty much equal highs. So this means that there's a high chance that price come back to that level. I don't know when, maybe eventually, maybe later on. But anyway, now what we have left to do on Euro USD, it's pretty simple. So as this POY already got mitigated and price already just not destroyed it, but reacted from it, now we can just wait for the POYs below to be mitigated again, because we're still in the same range. Nothing changed for the range that we are in. And on Euro USD right here, so this is still the low of the range, this is still the high of the range. And if you take your fib from the bottom to the top, you will see right here that we still have those two POYs, and then we just can wait for those two POIs mitigation. So we have a 4-hour one here and a 1-hour one in the bottom right here. So yeah, what we do is just to wait for one of those POIs mitigation. When the POI is mitigated, like usually, we're gonna wait for a 15-minute change of character / breakout structure to the upside. And when this happens, we will be able to then look for another entry at our new POIs in the new 15-minute range. But for now, there's nothing much to do left except wait for the POI mitigation first. So yeah, we don't look for any counter trends, we don't look for any internal setups right now. It doesn't make any sense. Our range is good, our price action is good, and we do have some liquidity right here. So basically price actually broke structure, you see right here, to the upside. That's internal structure, of course, that's not overall structure, but this is still nice liquidity close to the POI. There's still nice inducement right here that is being generated. So that's actually interesting and good for us, because that means that the POI is getting stronger. Here on the leg, we don't have any inducement anymore, because here we had some liquidity, but price swept that liquidity right here. And then in the leg right here, there's nothing much else to sweep. So this reaction creates us new liquidity to sweep close to the POI. Here we do have some inducement. Here we do have some like stronger inducement, because we have this little low, and this is as well the extreme POI, but this inducement is good too. Okay, so yeah, that's pretty much it for Euro USD, as you can see exactly right here. So this means that we're just gonna move on into the next one, that is GBP USD, and that's pretty much it. So before moving on into GBP USD, let's just do a quick reply for some questions. So guys, of course, if you have any questions, you can always ask them in the comments. I'm here to answer them right now. So it's the perfect occasion if you have any questions. So if you have like any questions or anything, because I know a lot of people like they ignore questions and they don't answer it, so it's the perfect time to ask whatever you want to someone that has more trading experience maybe. So yeah, Okay, so we have some questions about how to mark up a POY. So how to identify a POY? It's quite simple, guys. You just need, first of all, 3 rules. The first one is it needs to be unmitigated. It needs to be the opposite color candle connected to an imbalance or a fair value gap. And it needs to be above or below the 50%, depending if you want to buy or sell on the Fibonacci. So what does that mean? It means that right here, for example, on Euro USD, you know, we have some POYs in the bottom. This was the range. So my POYs needs to be below the 0.5, as this is the discount level. And the discount level is where price is really cheap. So this means that when you want to buy something, you don't want to buy it as a big, like, expensive price. Even if we go in a store, for example, you're always looking for some discounts. No one wants to buy things when it's expensive. So this means that when you're looking for buys in trading, it's exactly the same thing. So if, for example, you want to buy something, it's better for it to be below the 0.5, so in discount, because if you buy it right here, you have a lot of chances for price to just continue to go lower and you gotta get stopped out. So for example, you have a POY there that is the opposite color candle connected to a fair value gap or an imbalance right here. We had a reaction here, but that POY was actually not the best. And see what happened. We had one below, and this POY is the one that reacted. This one, price went through it. So that's why below the 0.5 is where you should be looking for your POYs. So this is how you should be actually looking for it, and that's pretty much it. I don't know what's going on with this is my hair. I was like, what is this? Okay, perfect. So yeah, that's pretty much it. So let's go now. Someone asked on how to determine the daily bias. For me, the daily bias is pretty simple. You just look at where price is headed and where is the last break of structure. In this case, on Euro USD, it's pretty simple. We have really small, very small structure, but at the same time, the last break to the upside really happened here. It's pretty obvious. We are overall pretty bullish. This is our big daily range. So I just focus on what's going on like right now, and I don't look back too far away. Some people, they zoom so much while looking for the daily bias. In my opinion, doesn't make any sense because every single candle is a daily candle. So this means that every single candle takes days to play, and what happened here, it doesn't matter on what happened here, you know. So some people are still looking for some like old order blocks or point of interest on the daily, and yes, they do hold some power, but at the end of the day, the daily, it's not something that will like react. If this happened like 6 months ago, what will happen here doesn't really matter, because anyway, we already know that mostly the market is dictated by everything that is like fundamentals, what's going on in the world, the economy. Of course, there's some algorithm as well, but at the end of the day, it's more important on where the structure is going right now than what happened in the past. So try to focus more clearly on your daily bias and focus on what's going on right now. That's the key to what to do. And anyway, there's some people that are trying to look for like candles. Every single candles means something different. I don't go that much in details. I just look at the overall structure, and my market structure tells me my overall bias, and then I just do it and move on from there. So yeah, guys, some people ask me where I'm from. I'm from Ukraine, but I live in Canada. So yeah, Canada, Quebec for more precision. So I speak French as well. Okay, let's go on GBP USD. So GBP USD exactly right here. So the daily bias here is a bit more different because overall we're bullish, right? But more and more recently we just broke structure downside. This might as well be a liquidity sweep, so maybe just be careful about that. That's why for now, if we go on the 4 hour, the sells right here, they're kind of counter trend for now. We had a break to the downside here. We had a break to the downside here as well on the daily. The only thing on the 4 hour, the only thing that I personally don't like right here is that we don't have a second pullback that is strong enough to confirm the bearish bias. Here we had a little pullback, but that just looks really weak. The size of this pullback is really insignificant. So that means if this one right here, pullbacks more. So as you can see right here, this one went inside the 0.5 and it went above the 0.5. So this is in the premium area. That's a way better pullback than this little thing right here that didn't even come close to the 0.5. So if now price breaks structure to the up to the downside, this will be a new bearish range and we will be able to look for some overall sells. Right now, for me, this is still the structure from this high to this low. This means that we can still look for POIs, but for now it's only counter trend, and this is on above right here. So we have a 1 hour POI here, 1 hour POI here, that if I go on the right time frame, that will be able to see it. So right here we have one, right here we have one too. So my POIs as well can be up to 3 consecutive same color candles. In this case they're all blue, so this is my POIs right here, blue 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 blue. And yeah, so that's pretty much it for GBP USD. It doesn't make sense to look for any buys right now, as anyway there's nothing else to look for. And that's pretty much it. We'll be just waiting and looking for the sells for now. If price then decide to just destroy everything and continue to be bullish, we'll be bullish, and that's it. We're just gonna continue our overall right here really bullish momentum to the upside. And by the way, guys, so I have my my chart colors that are blue and white, but now for education purposes, I'm gonna change them to the basic chart colors that are green and red, just for the fact that green and red charts are the classic charts, and a lot of people still have them. So I just don't want to confuse anyone, and everyone knows what are green colors and red colors. So just for educational purposes, I will change them to green and red, but usually I'm not using green and red candles. It's just for like new people to trade in, to recognize what's going on the chart. And as I want to make those things and those videos as beginner friendly as possible, that's why we're gonna change the chart colors just for the videos. And oh my god, that's so white. I didn't like that. I didn't like that. Okay, I'm gonna place it. That's such an ugly color. What did I do? That was my color? Okay. But yeah, anyway, I'm just gonna do it like this for educational purposes, and yeah, that's pretty much it. Yeah, green and red looks really weird. Like I completely agree, it does look really weird. But it's true that for when people see red and green candles, it's more for beginners, it's easier to understand. Like green means that it's to the upside, red means to the downside. So yeah, I understand for people who are not used to green and red colors charts, it's kind of weird to go back to it. But yeah, for educational purposes, I'm gonna do this like this. And anyway, you all know that my chart colors are not green, red. It's just for it, and for beginners it's just easier to understand. So yeah, guys. Okay, so oh my god. It's so unusual for me to look at green and red charts, but anyway, okay. So now let's go on USD JPY. So on USD JPY, exactly right here, it's pretty easy, but at the same time not really. Why? It's because first of all, let's go on the daily. The daily bias, the daily bias exactly right here, it's pretty confusing. Why? It's because here we have a break to the upside, right? So we have a break to the upside exactly right here. So that means that our range technically is bullish. So it means that we are looking to push to the upside. Here, technically, this is the structure, as you can see exactly right here. So this is the structure. Now, on the 4 hour, it's getting even more confusing for one specific reason. That is, the range is not clear, for the fact that here we have a pretty aggressive momentum, but at the same time, we had a really aggressive momentum to the downside too. So it's like counterbalancing each other. And if you zoom a little bit, you'll see that overall right now this looks like a consolidation. It's not a perfect consolidation like this, you know, but it's still a pretty solid consolidation, considering that here we're just bouncing between this low and this high. Now, if you want to look for some sells here, it can be, because if we consider this as a break to the downside, this is a break to the downside, and here multiple breaks to the downside, this can be considered as your big range for looking for some sells. Overall, the structure is still technically more bullish, so that's why if we break structure upside exactly right here, so this body closure, you see guys right here you have body closures and you have wicks, and if this body closure close above, so we have another candle right here, this will be able to consider this as a new range, and afterwards we'll be able to consider this as our new structure and look for some points of interest in that new bullish range. Okay, here we still have some older 4-hour zones and POIs that we can look for some sells. You can see it says half risk, and it's for one good reason, and the reason is the fact that like I said, the structure is not really good. The structure is pretty confusing, so that's why it's better to use half risk, because again, in trading it's super important, guys, that you understand that what makes you from succeeding what makes you from succeeding to losing, it's not your strategy, it's not how well you know what you're looking at. I mean, yes, of course, but it's not your strategy, it's not how you're trading, it's more how you're managing your risk. So yeah, that's why it's super important to have good risk management. And if you have a trade that is more unsure or more, for example, risky, it's better to use half risk or just manage your risk accordingly. So yeah, that's pretty much it. Now guys, let's see our questions. So we have a question on mind changing the chart color to blue and white. Mind changing your chart colors to blue and black, your normal one. So yeah, guys, like I said, for my community, I have my normal chart colors. It's just that those videos are like live streams are for everyone, beginners included. So people, when they see trading, they think about red and green. So it's just better for beginners to understand what's going on the chart. For them, blue and white doesn't mean anything, you know, because again, for traders, it's better to change the chart colors. That's why everyone have like other chart colors than green and red. It's completely normal. It's for the psychology, it's for everything. But for beginners, it's better to have the basic chart colors that is green and red, because it's more easy to understand. So it's just for educational purposes. Like, I understand for experienced trader this might look weird. For me it looks weird as well, but it's just better for beginners. So yeah, as those live streams are for everyone, it's just better in general. Okay, and except for that, how do you handle missed setup? Most times market don't come back to the extreme POI. So if you missed a setup, this really depends, because the most extreme POI, it's true that price never completely fully comes back into it, always. But yeah, it's normal, you know, it's normal that price sometimes doesn't come back into your entry. How to handle it? You just move on, move forward, and look for another setup. That's it. You cannot really chase the trade. It's not like, oh, price left without you and whoops, you know, you chase the trade and you try to force the trade. That doesn't make sense. You don't want to force any trades. It's not how you should be trading. So if something leaves and you don't have a setup or a price left without you, just move on. Market has multiple other opportunities. There's nothing that you need to chase, you know, there's no opportunities that are like the best one in the world. So just move on and look for another opportunity where price will come back into your POI. So it's true that sometimes price leaves, but it's fine. Okay, so now let's go into a new pair. That is GBP JPY. So another pretty common pair that we have, And first things first, what's going on right here? So first thing we're gonna do is to look for the overall bias, and the overall bias, we're having it on the daily exactly right here. So as you can see right here, the daily bias, it's pretty obviously bullish. For me it's obvious, but let's explain why I look at it and it's straight away for me it's obviously bullish. The thing is, when you're looking at the daily bias, again, you focus on what's going on right now. So you focus on the most recent break of structure. And in this case, the most recent break of structure is here. So clearly, this is pushing to the upside. What is this? This is pushing to the upside. So our bias is bullish. Now, if you go in the 4-hour, here, this break of structure is the same one kind of as on the daily, because what happened here is the previous range was from this low to this high. So here we already knew that we were bullish, as you can see right here. But then later on, right here, price just broke structure again. When price only wicked, so you see there's the body closure and there's the wick. There is a difference. When it wicks, it's not strong enough to consider it a break. I need a body closure right here. This is strong enough to confirm that this range shifted. So this means that after the break of structure, now this is the high and this is the low exactly right here. So we will be able to look for our points of interest that are POYs exactly right here, that are kind of supply and demand zones where price might show a reaction and react. This is why it's super important. Okay, so right here we have this low, this high. I took my Fibonacci tool, that is the little retracement right here, to measure the pullback. In this case, identified my points of interest on the 4-hour first. So we only have in this case one POY, that is this 4-hour POY, and that's it. Above the POY, exactly right here, we have something that is called the inducement or some resting liquidity. So this is a concept in SMC trading, that is the resting liquidity or inducement. So basically this is where we have some remaining orders left. So when price will come back to the downside and sweep these orders, we will expect a higher momentum to the upside again, because price in the market is always chasing liquidity, right? It's always chasing when there is remaining orders. That's why when we have, for example, a POY, technically there are remaining orders sitting there here, and this means that when price come back to that level, we can take those orders, here and then push up together. So this is what SMC is trying to do, so smart money concepts are trying to do, is to follow the overall higher time frame and the overall people who are executing in the markets, that are hedge funds, banks, etc. So yeah, that's why we have liquidity here, we have some POYs here. So this means that if price come back to that level, then what we're gonna do is just wait for a 15-minute intermediate time frame confirmation. Now we are on the 4-hour. We cannot just straight away enter on the 4-hour, doesn't make sense because we don't have any further confirmation. Okay, so that's why it's important to wait for a break of structure first, and then we'll be able to look for an entry. So yeah, that's pretty much what we have on GBP JPY. So now what we do is just wait. We don't have anything else to do, and yeah, so we just wait, and that's pretty much it. Again, what happened to my chart colors? It's just for educational purposes, guys. It's not my real chart colors. It's just for educational purposes, for beginners, for them to understand what's going on. It's not my chart colors, so sorry if it's confusing for experienced traders, but yeah, that way everyone is at the same level and understand what's going on the chart. Okay, now let's go on USD CHF, but before going on USD CHF, we have some people that asked for Bitcoin multiple times. So I'm personally not really trading crypto, Bitcoin, etc. You know, I'm doing more CFDs, that is Forex, so currencies, and some indices and gold, so like the NAS, S&P, gold, things like that. But let's go on Bitcoin. The strategy works on Bitcoin as well without any problems. The strategy works on pretty much every single market anyway. But yeah, that's pretty much it. So let's go on Bitcoin right here. Overall, Bitcoin, same thing. We're pretty bullish. We had a pretty big crash here, but now we broke the all-time highs again. As you can see, we broke the all-time high again, and overall, we're starting to get bullish again. So, wait, that was the all-time high? Yeah, okay. So, as you can see right here, our bias is still bullish. Now, what's going on with our bias that is bullish? Here we have our last break of structure to the upside. You see? So we have this last break of structure to the upside. This means that here we have your low, here you have your high, right? So our range right here is pushing to the upside, and we are looking for buys. Now, same thing, you take your Fibonacci retracement from the bottom to the top to measure the pullback. Here, the pullback is already pretty deep, and this was some older markups that I identified on the previous live stream. So we had a 1 hour POY exactly right here. As you can see, that price tapped into it exactly right here, and we had an amazing reaction. So looks like price came back into the extreme zone in this POY and had a little reaction too, before pushing to the downside more. So now the only other available point of interest we have for this trade is this 1 hour POY exactly right here. So same thing, like you see, it's the opposite color candle, as you can see, before the push up. So in this case, it's a red candle, bearish candle before the green ones. And now what we do on Bitcoin is just wait for that POY mitigation, and same thing, we don't really have anything else. So it means that price will come here, break structure to the upside, and then we will be able to move on and push to the upside. But yeah, we don't have anything else. Okay guys, so now let's go on USD CHF. So on USD CHF, same thing. We are overall here bearish. Why we're bearish? Because we're pushing to the downside multiple times. If you go on the daily, you'll see that overall the daily is heavily bearish. We have huge moves to the downside. The US dollar right now, with everything that is going on with Trump, everything that is going on with the Trump administration, the economy in the United States, is pretty like weird. Like weird and bad to be honest, what's going on right now in the world. So yeah, the USD is pretty weak. It's just dropping. Like USD CAD right now pretty much is dropping. But yeah, USD CHF, this is the range, so we are bearish, and we tapped into this hourly POY on top, as you can see, and here we already went and broke structure to the downside. We got our break to the downside that we were looking for. Okay, and let's see what happened right here. So we broke structure to the downside, and then we tapped into this 5-minute POY. That was not the most extreme one. The most extreme one was right here. But let's see if we created any 1-minute break of structure before the most extreme one to look for an entry. In this case, we did. We broke structure downside exactly right here, as you can see. So this was the last break to the upside. Right here, this was the last bullish range. And then and then price broke structure to the downside by breaking the low. So when you have a range, to have a break, you need a break either to the downside right here, or if you have a break to the upside, you're going to have a new bullish range. In this case, we got the break to the downside. So here, this was our confirmation. However, unfortunately, we were left with extreme POY on top right here. So this is where you could have looked for an entry. But as you will see later on, price instead just left. So we broke structure here. Then price just instead left and reached the final take profit that was in the bottom right here. So on USD CHF, that looks like price just left us, and we cannot really do anything about that. So yeah, price just left us exactly right here, and this means that we can no longer look for this sell, and we're just waiting. So yeah, that's pretty much it. We're just waiting. There's nothing new really that we can do, and that's it. So someone said the DXY is bullish. Guys, I don't know where you see the bullishness right here. Maybe tell me if I'm blind, but that's not bullish. For me, the DXY, it's really heavily bearish. Like, I don't know where the bullish is right here. Maybe your bullish is inverted, but for me the daily is really, really bearish. Like, the last break to the structure to the downside, it happened here. So this is actually your really big bearish range on the DXY. I know some people maybe just focus on like the most recent candles right here, but in my opinion that doesn't make any sense. Even if you go on the 4 hour, the last break to the downside happened here, so you know that's still a bearish range. And right now as well, what's interesting, by talking about the DXY, that is the US dollar index, what's going on right here, we are tapping into this bearish POY as well. So as you can see, we tapped into this bearish POY. So this is actually an extra strength, and if we have a sell on the US dollar, this can give us extra power to look for a sell or just an extra confluence. But yeah, that's pretty much it. So the DXY, I don't know guys where you see the bullish DXY, but it's not bullish. Like, I'm telling you, it's not bullish. But yeah, if you have another opinion, it's completely fine. Anyway, no one sees the market the exact same way, and that's completely normal. Okay, so let's go now on gold, as I love gold and a lot of people love gold too. So let's go on gold. And by the way guys, super important. Right now we almost at the end of the live stream, but if you stay until the end, you will have the chance to win a free $6,000 funded account for completely free on for traders. So at the end of the live stream, I will be asking a question. If you followed the live stream and you listened to what I said, you will be able to win a free $6,000 funded account. So this is really, really important. And if you wish to win one, just stay until the end of this live stream. Anyway, it's almost the end, but before the end, let's continue. So first things first, on gold. So the gold symbol is XAUUSD, so gold against the US dollar. And right here, what's going on? First of all, bam, daily, woohoo. What's going on the daily? On the daily here, we are bullish. More bullish than that. If you guys tell me that's bearish, I don't I maybe inverted bearish, it's bullish, I don't know. But anyway, gold exactly right here is bullish. So if you go on the 4 hour, you will be able to identify as well your 4 hour structure, and your 4 hour structure exactly right here is bullish too. So we are looking for some buys. If you're bullish, you're looking for buys. If you're bearish, you're looking for sells. So if you push into the upside, you want to follow the trend. You don't want to trade against the trend. If you're trading against the trend, you're in for multiple losses, and you don't want that. So here we have multiple break of structure to the upside. So one break here, and one break here, as you can see. Now, after you identify this break of structure to the upside, you will be able to identify your range. Your range is really simple. It's always the low connected to the high that has been broken. So this is the high. The lowest point connected to the high is this low, and your highest point is here. So this will be your bullish trading range. So your bullish slash range to the upside. Then you identify your Fibonacci from the bottom of the range to the top of the range, wicks included, to identify your points of interest. This case, on the 4 hour, there is no points of interest, so this is why you will move on into the 1 hour. On the 1 hour, exactly right here, we have this 1 hour POY that looks pretty good with those two candles, and as well it's connected to this fair value gap. So this is perfect. We have a little fair value gap exactly right here. This fair value gap is already mitigated, but it's fine because here we still left a little imbalance between this wick and this wick. That is not mitigated yet, so the POY is still valid. If, for example, the wick would have been a little bit lower, so let's say this wick pushed a little bit more to the downside, now the POY would have been mitigated. So the POY would have been already tapped in, and there is no more imbalance left here. There's no more fair value gap left, so this POY would not be invalid anymore. But now, as the POY still have some remaining imbalance here, it's still a good POY. Why? This just created some liquidity, like I was explaining previously. We have some liquidity and inducement right here. So we can wait for the POY mitigation, and then of course for a 15-minute break of structure to the upside or market structure shift to the upside, and that's it. We'll be able to look for some entries. So yeah, that's pretty much it. So we have some questions. So the questions are: if price mitigate the 15-minute, 5-minute, 1-minute POY, not the extreme, what will make the extreme POY invalid? If the trade already happened before the most extreme one, if you had already a good entry before the most extreme one, that invalidates the most extreme POY. No, I don't trade based on sessions either. I trade all sessions when I'm available, except for the Sydney, because the Sydney session is awful to trade. So you know guys, you have different sessions in trading, and yeah, you have the London session, the New York session, the Sydney session, and the Tokyo session, according to different currencies and central banks. And in this case, the Sydney session is the worst session to trade because there is no volume, there is huge volatility and really bad trading conditions. So that's why I avoid trading Sydney, but any other session you can trade during it. There is really no issues with that. If I'm in Australia, no, I'm in Canada, guys. I'm in Quebec, guys. Okay, so NAS. Let's go on NAS, and then we'll do quickly the last Forex pairs right here, and then we'll be doing the free funded account giveaway for a $6,000 account to have a $6,000 capital to trade with. Okay. So NAS, what's going on? So on the previous week, same thing. First of all, let's go on the daily. The daily here, again, when we focus on the current price action, we need to understand that what happened here, it's chow. We don't care. That's chow buy. It's gone. What we want to see, it's what's going on right now, not what happened here. Who cares? Bye bye. Okay, so we focus on what's going on right now. What's going on right now, you can see there is multiple bullish candles, and those candles are pushing to the upside. So that's why we'll be looking for some buys. That's it. Don't overcomplicate things. You don't need a candlestick pattern. You don't need anything complicated. You don't need like this candle here is bullish, but this is bearish, and here it has some hesitation. We don't care. Don't care about that. Keep things simple, okay? And to keep things as much simple as possible, you densify your last break to the upside, you get your range, and bam. If it's bullish, it's bullish. If it's bearish, and you follow that. That's it. Then let's go on the 4-hour. So again, the 4-hour structure, as you can see exactly right here, is as well pretty bullish. Why? Same thing as for the daily. Focus on the recent break of structure and the recent range. Now, your previous break to the downside, the previous break to the upside was here. We had this range from this low to this high. Now, we broke this structure, and we have a new break of structure to the upside exactly right here. So we have a shift in the range, right? So this was the first range. Now we move the range to the upside again. So like a little staircase, right? So if, for example, you have stairs, you're pushing to the upside. If you're here, yay, 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 yay. If you break this high, now you are here, right? Yay, 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 yay. So the previous stairs was from this low to this high. Now you broke that range, so now you have a new stair, you know? So that's why it's pretty much the same thing. It's like stairs, guys, but a bit different. But just know that if you're moving forward, you have a new range and a new floor type of thing. Okay, so right here we have now this high and this low. So we will be looking for some points of interest inside this range. Why I still have some POYs in the bottom, some points of interest in the bottom right here, is because this might just be some liquidity available, but this is a bit more complicated. But just know that you can identify your POYs in the current range and one range before the current range, okay? So that's pretty much it. In this case, if we focus on the current range, this is the low, this is the high of your Fibonacci. So you can identify all your valid POYs below that point. I just don't like the fact that my 0.5 is the same color as my chart. So let me just change the color of my 0.5 just to make it like prettier, whatever. Let's make it yellow. Okay. So yeah, yellow. Oh no, wait. I'm no. Okay. Wait a minute. So I want this to be okay. Perfect. Pretty Fibonacci. Okay. So now we identified your POYs below the 0.5. You have this for hour one, this for hour one. So now we're just waiting for price to tap into it. And look what happened. We tapped into this first 4-hour POY right here. We even had as well here the reaction. But now let's go on the 15-minute to see if we can look for an entry. Okay. So what to do when we're looking for an entry? First of all, we need to identify our 15-minute break of structure. Here, looks like it already happened exactly right here on Thursday. So let's see. We tapped into the POY exactly right here on Thursday and see what happened. We straight away broke structure to the upside right here. So we had this little range and we broke structure to the upside. So straight away, you could have looked for an extreme POY to look for an entry. Now, for looking for the extreme POY, you can look at it on 3 different time frames. On the 15 minutes, the 5 minutes, and the 1 minute. By the way, let me just make this everything white. Okay. So exactly right here, we have this 1 minute POY exactly right here on the 1 minute time frame, as you can see, and we have nothing else. On the 5 minutes, there is nothing else as well below the 0.5 because again, remember, you don't want your POYs to be too high. Doesn't make sense, okay? No. You don't take POYs above the 0.5. If not, you're gonna end up with a huge range, huge stop loss, disgusting risk to ratio. So right here, 0.5 below, we have this 1 minute POY and looks like we have nothing else. So straight away, really simple, you just enter at this 1 minute POY. Wow, exactly right here, as you can see. And this means that your stop loss will be below the low. When you set up your entry, okay, when you set up your stop loss, it's super important. When you set up your stop loss, it's super important to add enough space for liquidity sweeps and for spreads. So here it's a buy. You don't have spreads when you exit the buy, but it's still important to add a little bit of pips for liquidity sweeps because price might do this, sweep some liquidity, take some remaining orders, kick everyone out for people who had their stop loss too tight, and then continue to push to the upside. So it's really important to leave enough space for the trade to breathe, okay? And a little bit of pips as well for the entry. Then 103 risk to ratio right here, see you have your risk versus your gain. So here, for example, you risk 1% to gain 3%, if you risk 1%, of course. And your take profit final will be at the hourly high. Your hourly high for this trade would be somewhere around right here. That's already a pretty nice high for around a 106.5 risk to ratio. So yeah, let's see what's going on. And again, really important, don't have your stop loss too tight. Again, if you have your stop loss too tight, you're just risking yourself to get stopped out and you don't want that. So let's see what's going on. So price tapped into the POY, as you can see perfectly. Here, even if your stop loss was a little bit more tight, you would have been still in the trade, but it's better to prevent than to get caught in the loss. And as you can see right here, your 103 risk to ratio got hit instantly, almost instantly, exactly right here. And then that's it. Basically now the trade is gone and we hit the final take profit. So this was as well a trade and a POY. This POY was forecasted for weeks in the live streams. Like if you've joined the live streams like 1 week ago or even 3 weeks ago, this POY was there, and it just right now that it played out because we waited. And it's super important to have this patience in trading, to wait for the right opportunity without chasing the opportunity. Okay, it's super important. Okay, super important. So yeah, as you can see right here, price just pushed to the upside and we hit our final take profit for around a 1-to-6 risk to reward ratio. So that's pretty much it for NAS 100. And guys, if you don't believe me for the markups, I can show you the markups I personally sent in my Discord just for fun, you know, just to show you that this POY was there for weeks and just to show you how it's important to wait. So this is NAS 100 4 hour. This is a screenshot when price, you see, was not in the POY. This is the exact POY. It was there. We were waiting for it. If we go back a few weeks ago, so exactly right here, this is NAS. This is the POY. As you can see, it's the same. It's the same POY. So this POY right here, when price was in this area, we already waited for that POY. You know, when price was here, you know, this was what, 10 days ago. We were already waiting for that POY. You know, so it was there for days and days, and even in the weekly outlooks, whoops, it was days for a really long time. So we had an amazing trade out of it. Okay, now quickly let's go on USD CAD. So USD CAD exactly right here. We were waiting for a sell exactly right here. And basically what happened is that here we had a little loss. And again, guys, losses are normal. Losses are normal thing in trading, okay? No, it's not true that everyone is winning always. It's not true. So if you see people like online pretending that they never they never lose, that's false. That's false, you know, that's fake, you know, because it's completely normal to have losses in trading, and a lot of people, they hide their losses because it's not good marketing, but that's just false expectations, you know. So yes, it's normal to have some losses. That's why we have win rates, and that's why we have risk to reward ratios, because trading, it's all about probabilities. It's not about how good your strategy is. It's all about how you manage your risk, how you are trading. Are you consistent with your risk? Are you consistent with your rules? And yes, you will lose. It's normal. So don't worry about that. Okay, now let's go on USD CAD. So here, what happened is overall pretty easy. We were having this range from this high to this low, and we identified our last point of interest exactly right here on top. That's cool. So we tapped into this POY exactly right here at first, and then we created our confirmation. That was the 15-minute break of structure to the downside right here. Then we identified our most extreme POY right here on the 15 minutes. So straight away you enter right here, stop loss above the high, and then target in the bottom. And as you can see right here, unfortunately price just pushed up and hit our stop loss. So this was a little loss. And again, who cares? Even if here price went up and hit our stop loss, it's fine, you know. This was one loss, and then on NAS we had a 1-to-6 risk to reward ratio win. So one loss, that is -1% plus a 6% win. Overall, you're still up 5%, just like this, you know. So that's normal. And here the trade, nothing really bad happened about it. It was all according to the strategy. We had the right break of structure. We had the right POY. So nothing really bad happened about this trade. This is just, unfortunately, market that decided to push a little bit more to the upside, and that's it. So yeah, that's pretty much it for USD CAD. And here now we broke structure to the upside, but it's too like soon to wait for any buys or anything. This might just be a liquidity sweep right here, and then price might just continue to push to the downside. So for now, I will just be waiting for a better structure on USD CAD. AD USD, same thing. Here we broke structure to the downside here and here. So here looks like we're more starting to get more counter trend bearish, but if you take a Fibonacci from the high to the bottom, there's nothing on the 4 hour. And on the 1 hour, however, that's true that we have this 1 hour POY that we can look for some sells. And that's pretty much it. So for now, we can look for some sells right here. Those sells for now are still counter trend as we don't have a confirmation. So let me add counter trend. And yeah, I'm gonna place an alert right here so I can look for my confirmation when it happens. Even if overall the daily is still bullish, that's why it's important to write right here counter trend to lower your risk. On NZD USD, it's pretty similar, so we still have this kind of a bullish momentum. Now we're pushing to the downside, so that's why we have as well right here a counter trend POY, but at the same time we still have some last bullish POYs right here. Price tapped into this 4 hour POY, so we can actually look for some trades. In this case, we already got our confirmation too, so we got our break of structure upside exactly right here. The hourly high would be there, you know, so this trade to look for some buys would still be valid. I understand we have some bearish momentum, but like I said, it might just be a liquidity sweep, so we can still look for some buys. Here, price came back into the bottom. Looks like we already even maybe tapped into the extreme POY. So let me just identify where was the extreme POY for that area. When I'm looking for the extreme POY, I'm looking for the lowest POY in the range. In this case, here looks like it was already mitigated. We don't have any gap, so that's invalid. Let's see if this one is valid. So again, I'm only looking at the opposite color candles. Here, same thing, there's no fair value gap, so that POY is invalid too. So this means that looks like the only valid POY that was the most extreme one is this 1 minute one. Let's go on the 5 minutes. So yeah, the 5 minute is pretty much the same right here, even if you can add more candles, but that's not really extreme. So in this case, take the refinement can be a good option to have a better risk reward ratio. And as you can see right here, price just tapped into the POY, and now we are pretty much break even. So your stop loss should have been below the low right here. And yeah, we're pretty much break even at the moment. And break even, that means that we should not be in the trade right now. Why we should not be in the trade right now? For one specific reason, that is market closure. So market right here closed, as you can see. So we are now during the weekend. So during the weekend, what happens is after market closure, we have a market open. And when you have the market open, you never know what's going to happen during the weekend. And it can create a huge move at the market open, huge volatility. And it's as well Sydney session where the spreads are ugly. There is bad market conditions in general everywhere. So it's good to not be in a trade during the weekend when it's at break even or close to your stop loss. In this case, it's at break even. So when price will open, when market will open, we will see the reaction. And if the trade idea after the market open is still valid, you can have a re-entry. But for now, you should not be in this trade for now. But yeah, there is a trade opportunity exactly right here on NZD USD for a buy. Okay, now let's go on Euro GBP for the last pair, and that will be pretty much it. So maybe what if I do this? That's cool. Okay, so let's look at it exactly right now. So first things first, we are pretty bullish. It's incredibly bullish exactly right here. And more recently, we created two really aggressive breaks to the upside. So all of those POYs are now too old. And now we will be focusing on what's going on more recently. So this is the last break to the upside. So now this is our range. And we do have this for our POY that is really big without any inducement, but the POY is still valid, as we still have this new structure from the bottom to the top. Then on the 1 hour, we can go as well to look for any other POYs. Instead, unfortunately, we don't have anything else on the 1 hour, so we just keep the 4 hour POY exactly right here, and that's it. So yeah, guys, that's pretty much it for the outlook. Now now, thank you for everyone who joined, but before leaving, don't leave now, because you can have the chance to get a free $6,000 funded account right now for free without joining anything, buying anything. It's completely free. So this is the time to give away the free funded account on For Traders. So if you want to win the free funded account on For Traders, it's time right now. So there's some people asking to explain the rules on For Traders. Guys, it's pretty simple. If you don't know how funded accounts work, it's actually simulated trading companies that are called prop firms that give you funds to trade on, so accounts to trade on in exchange to passing a challenge and to prove that you are profitable. So for example, you have multiple options. You have small funded accounts, big funded accounts, and you just need to pass a challenge. If you pass the challenge by respecting the profit target, the drawdown, and the other rules that, for example, are maybe dependent on your challenge, but you just need to respect some rules that are pretty simple. Just there's a 40% margin rule, but it's really impossible to reach. The only thing you would fail the funded account because of that rule, it's because you open a huge lot size. So there is some rules to respect. It's most likely the maximum drawdown and the daily drawdown that you need to be aware of. Anything else, it's really hard to breach any challenge on For Traders. There's no hidden rules, there's anything. So if you are able to prove that you are a profitable trader by hitting the profit target exactly right here without respecting the maximum drawdown, they will give you a funded account to trade on, and then all the profits you make on that funded account you will receive from a 80 to a 90% profit split, or 70 if you decide to have a cheaper challenge. And that's it, guys. There's different type of challenges. Depending on which one you take, you're gonna have different rules to respect, but it's all explained right here on the left, so you just read it. And if you still have more questions, you can go in the FAQ right here or just contact their support. So yeah, guys, now we're gonna do a giveaway for this 6K funded account exactly right here, and that's it. So guys, to participate to the funded account giveaway, it's really simple. Okay, really simple. You need to go on YouTube, because right now I'm streaming on YouTube. I'm streaming directly on the For Traders YouTube channel. So exactly right here, it's really easy. You go on YouTube, you write For Traders, it's exactly right here, and this is the live stream that we are having right now. So you just click on it and I will ask you a question. Okay, I will ask you a question, and the first person who gets the right answer will get to join, will get to win the free funded account. So yeah, guys, transfer on YouTube, because for everyone who is on TikTok right now, I will be closing the live stream, so you will not be able to answer on TikTok. Just transfer on YouTube if you want to have the chance to win the free 6K funded account right now. Okay, so go on YouTube to have the chance to win a free $6,000 funded account right now without any cost, anything, just by answering a question. So yeah, guys, right here, go on YouTube, For Traders. You just need to subscribe to For Traders and join the live stream. I will be waiting for let's say 2 minutes more, and then we're gonna be able to do the giveaway. So yeah, guys, transfer on YouTube right now. I'm waiting. I'm gonna be stopping the live stream in 1 minute. So transfer on YouTube. Let's go. Woohoo! Let's go. And yeah, so yeah, guys, for people who were on TikTok, ciao, and go on YouTube if you want to participate to the giveaway right now. Okay, so I stopped the live stream. So if you are from TikTok, I stopped the live stream right here, and now it's time to just wait a little bit, like maybe 1 minute more, and then I will be waiting. Okay, guys, so what is the question that we can ask today? What is the question we can ask? What do we talked about during the live stream? Okay. This is a question, it's pretty easy question. If you listen to what I said today, it's gonna be easy to answer. And it's not something really like structure based or really strategy based. It's something general in trading, okay? And everyone can have the same chance to answer, okay? If you listen to what I said today, it's depending on what I told you, not what you think, okay? So if you follow the live stream, you will be able to answer, okay? So again, remember what I told you. Don't answer straight away what do you think. Answer based on what I told you today, okay? So, okay guys, I'm gonna be right here putting this, oopsie. So I'm gonna be writing the question right now. Let me go on TradingView. I'm gonna write the question and then I'm gonna show you the screen. So last 2 seconds to prepare yourself to write fast. Okay, perfect. Okay, so the question will go out in 3, 2, 1. Again, depending on what I told you, okay? I have one good question, one good answer in my head, and that's it. So let's go right right now. Okay, perfect. So guys, what is the most important thing in trading to be profitable? Okay, what is the most important thing in trading to be profitable? So let's see what people are telling. So what is the most important thing in trading to be profitable? Okay, and this is the chat, so we'll be able to see the chat exactly right here. Bomba. Okay guys, so this person right here is the first one. So risk management, this person right here is the first one who answered. So it was a super straightforward question, and this is exactly what I told you today. So risk management, it is the most important thing to be profitable. If you cannot manage your risk, you'll blow your accounts, you'll blow your challenges. So this person right here, it's the first one who got it right, as you can see exactly right here. So congratulations, there was no other answers. And for everyone who answered right here, congratulations to everyone as well. So you got the right answer as well. So yeah guys, we have a lot of good answers. Risk management. So that's true, we have like other things, but yeah, risk management right here is the most important one. So this person exactly right here, so let me just look at your channel. So if you recognize yourself right here, so Hensi, just DM me on Instagram. So to claim your price, super easy, just go on Instagram or on Discord or whatever, and super easy. You go on my profile, it's in the description of this live stream as well. So right here, this is my Instagram profile. I have as well a TikTok, but on TikTok it's too hard to DM people. So yeah, go on Instagram exactly right here, DM me, just send me a proof that this is your official account, you know. And yeah, if this is your official account exactly right here, and yeah, you will be able to claim your price. I will send you a promo code for 100% off for a funded account. So yeah guys, that's pretty much it. And I cannot connect myself to TikTok, I don't know why. kind of funny, but whatever. So yeah, guys, thank you for joining. That would be pretty much it for today. You know, that's pretty much it for today. And yeah, next week we're gonna have another live stream. So next week we're gonna have another live stream at the exact same time. And again, we're gonna be able to give away funded account next week again. Someone said that he was not the first, I was the first. And no, that's not true for me. This is the first person right here who got it. You were second. So right here, this is the first person who got the right answer, exactly right here. So this is my chat, so it's based on what I personally see. So yeah, guys, thank you very much for joining. Again, if you have any more questions about my strategy or about anything else, don't hesitate to just send me a message. I reply to everyone. And yeah, so see you next week. I hope you enjoyed this live stream. And yeah, see you soon, guys. Have a nice day. Ciao, ciao.